Hey, welcome. I want us to look at one of the headlines that has been flying, in the Nigerian news. Uh, Lately, I think on the 21st or 20th, 21st, the Central Bank of Nigeria had their, MPC, which is Monetary Policy Committee, and they retained their MPR rate at 26.5%, which means what happened is that they did not increase the MPR, the monetary policy rate, which means they left it, without increasing the rates. And then the question now is, because why I'm doing this is that I need to begin to educate some business owners, entrepreneurs, and also startups, because a lot of startups don't care about all these economic indicators, and they just go in, start a business, go to the bank or borrow money, and they don't know what informs that decision that they are taking. You understand? They don't really know what is behind it. And when you go to the bank, they won't tell you some of these things. Now, the big question now is, what is MPR? What does it really mean? The monetary policy rate. Monetary policy rate. What does it mean? It's simply, like I said, it's at 26.5%. You see, what it simply means is that central bank is telling Nigerians that Nigeria is not ready for aggressive cheap money. They are not ready for aggressive cheap money, because the central bank appears to be prioritizing price stability now. And after price stability, they are looking at exchange rate stability and also protect against against another inflationary shock that could happen in the country due to rapid credit expansion. And when this is what they are considering, they need to leave the rate unchanged. But however, there is an important trade-off that every business person must take notes. Every business person must do what? Must take notes. You see, keeping interest rates high may sometimes protect microeconomic stability, but it also means that businesses must continue to operate in an expensive capital environment. Did you get that? It means that startups, businesses, entrepreneurs will continue to operate in an expensive capital environment. And what that does, or what it means is that, or the impact of that is that it creates both pain and opportunity. But today, I'd like us to look at the direct impact on businesses. The direct impact of the MPR rate, or monetary policy rate, at 26.5% on businesses. So, because these are some of the things that every smart entrepreneur should be asking: what are the direct impacts of this rate on my business? Number one is that it will increase your working capital, because it will lead to higher cost of working capital. And you see, when you don't know that, because if you go to the bank to borrow, you see, businesses borrow money to buy inventory, they borrow money to buy raw materials or to finance operations. You understand? And we call it, at times they call it working capital. It's called working capital because there are different types of capital: a startup capital, operational capital, working capital, this, that. Understand? So if you don't really understand what the CBN is really saying about, or what they are truly saying about the MPR, you will just see that you'll be paying higher, and it will also increase your cost of, working. That's the cost of working capital. And the number two impact on your business is that it will reduce your profitability. One of the things that that is an high interest rate or MPR rate, or when it is high already and the CBN decided not to increase it, is that yes, it will definitely affect your profitability. Some analysts out there will tell you that, oh, they are trying to stabilize the economy, this, that. But one of the impact is that it will reduce your profitability. And the number three impact is that it will also expand. No, it's expansion might be difficult. It might be harder when the MPR rate is kept unchanged or is increased. So now let's hope that they will keep it unchanged for some period of time, depending when the economy will be more stable, then they can bring it down to an extent. But however, for now, just know that it is not a child's play. If you want to do business, you have to be thinking of how do you solve big problems that will generate fast income. So now let's quickly look at some more effect of this MPR rate. The number 4, I think I've shared 3 now. The number 4 impact is that rich companies, big companies will gain advantage. It is an advantage, MPR, to big companies with strong internal cash flow. It will help them because some of their competitors will depend on loan from the bank, and some of them might be struggling to meet targets or meet demands. And big companies that have cash flow, they will just continue. They can even take over your customers if care is not taken. So now another impact of the MPR at 26.5% is that SMEs need alternative financing models. And when you don't have that, alternative financing models, it will affect your business. And that is why this MPR creates a greater demand for equity financing. You need to begin to look at equity financing as an SME. You need to begin to look at that. You also need to look at cooperatives as a source, another source of creating money, generating capital. Another avenue that you can look at is also venture capital or private credits, whatever. And you can even look at invoice financing, supplier financing, where your supplier finance your production. You understand? Or revenue-based financing. You get. But however, this is the time for you to be, innovative about how you raise a fund apart from the bank, because bank, they are not smiling now. The 26.5% of the MPR is not the final rate, because that is what central bank is giving to the commercial banks. And the commercial banks will also add their own expenses, their own commission, their own whatever, they will add it to it. And it will still go up, maybe it can be around 28.5% or whatever. And you know what that means? If you are borrowing money from the bank, you are paying 28.5%. It's not easy for a startup or an SME. So now let me also tell you one more impact. One of the impacts is that consumer businesses must learn to adapt in this type of situation. And what do I mean by that? You see, businesses may need smaller product sizes. That means you need to adapt to what the masses or your customers or your target audience, what they need. Or you look at how you can, introduce, like there's a strategy, a marketing strategy in business that is called sachetization. Bringing down, segmenting your product. If you're selling a product and the product is just, for a premium product, you are selling it for, like, let's say 250,000 naira. You know that a lot of people might not be able to afford that. Now you can have you can sachetize it and have one for 20K, for 10K, for 50K, for 30K, for 100K, so that you can, you have more customers. You can even look at, okay, how can I do flexible payment systems? You can incorporate flexible payment system in your business, where you ask your customers or clients, to pay. You design a flexible payment system for them. And some, it could be subscriptions, based on subscription, and say, okay, you can subscribe at tier 1, tier 2, or tier 3. And some, it could be, you just have to look for an affordable financing structure for your business, so that you can retain your consumer. Because consumer businesses must learn to adapt. You just have to be strategic. And then finally, don't give up. Because one of the things I realized about this country when it comes to business is this. You see, Nigeria is gradually moving from an economy where entrepreneurs primarily ask questions like, where can I borrow money? Most of the times we look at, how can we get this money? No. Nigerian entrepreneurs, or Nigeria, is gradually moving from an economy where entrepreneurs will be asking that kind of question of where can I borrow money, to the one that smart entrepreneurs or businesses are asking, and that is, how can I build a business that will generate cash fast? You understand? That will generate cash faster. You understand? Faster, not even fast. It has to be faster, and then use less debt. and solve an essential problem. Essential problem. I mean essential one. I told you, I said if you want to have your cake from the national cake, solve national problem or one of the national problems. So if you want to, you need to learn to solve an essential problem and attract, your own court from the national cake. You get that? All right. So let me stop it here today. And for the Nigeria Wealth Shift series that I have been sharing for the past like 10 or 11 days now, I'm taking it to the next level. I'm taking because I realized that the responses, attention, attractions has been wow. It has been amazing. I see that a lot of people are thinking thoughtfully, productively, innovatively. Even I was amazed when I read some comments. Yes, I'm sorry. I need to apologize to my Facebook audience because I couldn't attend to all the comments on the series. Some I was just overwhelmed. I couldn't. And most of the time, I don't want to share the responsibility to one of my team. So what I'll do is I'll create time to reply personally. And then I think I've been able to reply some on LinkedIn. I also want to appreciate my LinkedIn, friends. Yes, LinkedIn family, Facebook family. Thank you so much. You guys have been wonderful with the way you are engaging with my content. So thank you. And I promise to do more. In fact, we are taking hashtag Nigeria Wealth Shift to another level. In fact, it might, not that it might, we are thinking of, turning it to global brand. Yeah. That is how you start a business. That's how you start a business that that this business is going to impact lives, community, solve problems. And once you can solve problems, you generate money. Money will not be a problem. So on this note, I will share the update with you on the Nigeria Wealth series and then tell you the next phase. Thank you. I am Taiwo Balogun Impact. Taiwo Balogun, or you call me Taiwo Impact.